A very warm afternoon to all my dear students and welcome to the lecture of TY BCom Semester 5 Advanced Accounting and Auditing Paper 6. I, Professor Shojasha, welcome you all to my lecture. Now dear students, as you all must have solved the sums which we did in the last lecture, that was your VNSGU 2018. Fine. Today also, as you all have the sums, I have shared it in Google Classroom. We will be solving a set of sums again related to your ratio analysis chapter. I hope now every student must be clear with the formulas and how to solve the long sums. Fine. So we'll be quickly starting with the sum which I have provided you. This is your again VNSGU 2018 students. It is of Ahuja Limited, right? What is the sum all about? We'll see as usual and then we'll be starting to solve it. Fine. What is the sum all about, students? The very first thing they have given is your adjusted purchase is 60% of sales, right? In the last lecture itself I told you what do you mean by adjusted purchase, students. Adjusted purchase means your cost of goods sold. Next thing they have given is net profit after 60% tax, right? So that is given as 6 lakh. So after 60% tax means, students, I can say that this amount which is given is 40%, right? Because 60% is the tax rate. So after deducting 60%, you are having an amount of 40%. What is my opening stock? Opening stock is 3,30,000. Closing stock is 2,70,000. So you can find out average stock also out of that. Okay. Equity capital is given, preference capital is given, 10% debentures are given and 15% long-term loans are given, right? So I can say 2 long-term liabilities are given. Then the next you are being given is your 15% loan is done. Then retained earning is given, right? Current assets are given, fixed assets are given, and fictitious assets are given, right, students? So all the particulars you are having. Apart from that, additional information you have 3. The very first is credit sales are 3/4 of total sales. Debtors and BR are 33 1/3% of current asset, right? So I can find out of this information, because we have already seen current asset is given. So I can find out bills receivable and debtors out of this amount, right? Stock turnover ratio is 12 times. So again, from stock turnover ratio, I can find something of cost of goods sold, because I am having average stock, I am having stock turnover ratio also, right? What you need to find out? NP ratio, okay, operating ratio, rate of return on capital employed, equity share capital and shareholders fund. Then you need to find out debtors ratio and you need to find out interest coverage ratio. Fine. So what I need to do is I need to find from this 3 information whatever particulars I need for the entire sum, right? So same like your previous sum. First we'll be finding out the particulars and then we will start to solve the entire sum. Fine. So from where do I begin, students? I will begin first of all from the stock turnover ratio, right? So that I can find out the very first information of your cost of goods sold which I need. Fine. So what do I do? Stock turnover ratio is equals to cost of goods sold upon average stock, right? So cost of goods sold upon average stock. I am having the answer of stock turnover ratio, students, that is my 12 times. So I'll write down 12 is equals to cost of goods sold, I don't know. Average stock I can find out, opening plus closing. So I'm just doing it in working. This is all working we are doing. Average stock is equals to 3,30,000 plus 2,70,000 divided by 2, right? So what is the answer you all are getting? 3,30,000 plus 2,70,000 divided by 2. So the answer I am getting is 3 lakh rupees is my average stock. So I'll put up 3 lakh here. So multiplying this on the LHS, you will get the answer of 3 lakh into 12 gives you 36 lakh. I hope it is clear to each and every student. So the very first particular you have found out is your cost of goods sold, that is 36 lakh. I hope it is clear to each and every student. Fine. Moving on quickly, once you have got the cost of goods sold, students, I have one information, that is adjusted purchase is 60% of sales, right? So what is my cost of goods sold? It is 60% of sales. So my sales will be if my COGS, we'll put up in the equation, if my COGS is 60%, my sales is 100. So if my COGS is 36 lakh, how much will be my sales, right? So from this information you can find out the sales. So 36 lakh into 100 divided by 60. So you'll get the answer of 60 lakh rupees, right? So 60 lakh rupees is my sales. What is it, students? It is total sales, right? We are not concerned right now with the credit sales or the cash sales, but I have got the answer is of total sales. Fine. So moving ahead, after I get the total sales, next information is to find out the credit sales, right? It goes completely in story form. One thing you have found out, on the basis of that you have to start with the next thing so that you can quickly complete the sum. Fine. So sales I have been given. What information is given? Credit sales. Credit sales is equals to 3/5 of total sales. I'm just writing the equation form which is given in the sum. So 3 upon 5 into 60 lakh rupees. 3 upon 5 into 60 lakh rupees gives me the answer of 36 lakh, students, right? So my credit sales comes to 36 lakh rupees. That is my credit sales. I hope it is clear, right? So you can solve it again simultaneously. Credit sales is my 36 lakh. Done. Okay. Now after I get the credit sales amount, right? Cash sales I will not find out because I don't require it in any formula. In Deris ratio also we require only credit sales, right? So no need to find out the bifurcation of the cash sales. As such it is the remaining amount. Fine. Now after I found out this thing, right, I need one more information which is already given in the sum, that is debtors and bills receivable are 1/3 of current assets, right? So what I'll do is I'll calculate debtors plus bills receivable amount also, because I need that in the ratio of your debtors ratio, right? So debtors plus bills receivable is equals to 1/3 of current assets. So 1/3 of current assets means how much is my current assets, students? It is 21 lakh, as you can see. So current assets is 21 lakh. So the answer which I am getting, debtors plus bills receivable, is my 7 lakh rupees, right? All this information will be helpful to me in the sum. So what I'll do is, whatever information is given in the sum, I'll find out the remaining particulars on that basis, right? So debtors plus bills receivable, credit sales we have found out, and cost of goods sold we have found out. Again, average stock is one of the answers. Is it clear to all the students? Fine. Okay. Moving on to the next part is your, now we can start with the formulas. Fine. Because we have calculated each and everything what is given in the sum, we can start now with the formula. This is your working part, students. Fine. So the number one which they have asked is your NP ratio. Right? NP ratio. What is the formula of NP ratio, students? Number one, net profit ratio is equals to net profit after tax, that is NPAT, divided by sales into 100. There is half mark of each formula to be written in the exam, students, so don't again try to skip the formulas. You have to compulsory write it. So net profit after tax, how much it is? Already given in the sum, 6 lakh. So 6 lakh divided by total sales. How much is my total sales, students? 60 lakh into 100. So 6 lakh divided by 60 lakh into 100. So what I'll get is the answer of 10% after dividing this thing. Fine. So what is my NP ratio? Net profit ratio is 10%. Fine. Suppose it is clear to each and every student. Fine. Simple thing, whatever we were doing in the previous lectures and the previous sums also. So NP ratio is 10%. Is it clear? Okay. Now moving ahead to the next part of the sum, right? So what is it? The next part they have asked is your operating ratio, right? Just now we saw the entire sum, students. There is nothing like operating expenses given in the sum, right? So what you need to do is you need to first find out the net profit before tax amount, fine? So net profit before tax amount, if you find out, then you will get the answer of your operating expenses, fine? So what we'll do is we'll first find out the amount of various profits, then we will be moving on further, right? So in your sum, net profit after tax is given, students, right? So what you can do is you can find out the entire story of the profit, which will be helpful to you in the entire sum, fine? So starting with the first part is to find out the gross profit, right, students? What is gross profit? Gross profit is equals to sales minus cost of goods sold, right? So what is my sales? 60 lakh minus cost of goods sold 36 lakh. So what I'll get is the profit of 24 lakh rupees, right? Cost of goods sold is 36 lakh and my sales is 60 lakh. So my GP will be 24 lakh. I hope it is clear to each and every student, right? Now what we do is, students, from your GP, we always deduct your operating expenses. When you deduct your operating expenses, we are not knowing right now, but when you deduct it, you will get the net profit before interest and tax, students, right? Net profit before interest and tax. I hope it is clear to each and every student, right? So we are not knowing right now that also. Then we will deduct the tax amount, right? This is your net profit before tax. We will deduct the tax amount. Tax is 60%. That also we are not knowing. The final answer that we are knowing is your net profit after tax, right? So net profit after tax you are having, that is 6 lakh rupees. So I told you in the beginning that if it is after deducting 60% of tax, right, that is this remaining amount will be 40%. So what will be the 60%, right? So if you calculate 6 lakh into 60 divided by 40, that gives me the answer of 9 lakh. So what I have done is 9 lakh rupees tax I have paid, right? So when you are moving on from downwards to upwards, right, students, this signs are reversed. Fine. So whatever you have deducted, now you need to add it. So 6 lakh plus 9 lakh gives me the answer of 15 lakh. Then only I can deduct 15 lakh minus 9 lakh gives me 6 lakh, right? Okay. So here, now when I am having 15 lakh and when I am having 24 lakh, so what amount would I have deducted, right? So 9 lakh if I would have deducted, then I have got the answer of 15 lakh. So again 15 lakh plus 9 lakh gives me 24 lakh, right? So always remember, whenever you are going from downwards to upwards, your signs changes, right? So what I have found out is, I have found out every kind of profit which is necessary in the sum. I hope it is clear to each and every student, right? So we were finding operating expenses, right? So your operating expenses now you have with you and you have found it out. Fine. I hope it is clear. So now you can put it in the sum. I hope everyone has noted this down. If not, I give you 5 seconds. If you can complete your sum. Okay. I suppose everyone must have noted this sum down. Fine. Moving on to the actual operating ratio formula. Fine. What is it? Now you have the operating ratio formula. What is the operating ratio formula, students? Operating ratio is equals to operating ratio is equals to, what is operating ratio formula? You have cost of goods sold plus operating expenses, cost of goods sold plus operating expenses upon sales into 100, right? Cost of goods sold plus operating expenses upon sales into 100, right? So putting everything in the formula, students, cost of goods sold, you all know we have 36 lakh plus operating expenses is 9 lakh we calculated at present. Sales I have is 60 lakh into 100, right? So when you solve this, you will get the answer of 45 lakh upon 60 lakh into 100, right? So that is equals to 45 lakh divided by 60 into 100. You will get the answer of 75%. That is my operating ratio. Operating ratio is equals to 75%. Hope it's clear to each and every student. Fine. So this is the second part we have calculated. Now the third part we are moving on, students, right? The third part is we have started with the third part, that is your rate of return on capital employed, right? So again, writing down the formula of rate of return on capital employed. Rate of return on capital employed. Now you can quickly write down the formulas and put up the figures in it. The calculation part we have already done it. So rate of return on capital employed. Rate of return on capital employed is equals to, what is the formula, students? That is your, again we can say, net profit before interest and tax divided by capital employed into 100. Divided by capital employed into 100. Remember each and every formula very carefully. If any mistake in the figures, then it will be again incorrect marks for you people, right? So what we'll do is, here you require net profit before interest and tax, students, right? So whatever you have calculated here, we will use that formula for calculating net profit before interest and tax, right? So here, students, the net profit before tax was your 15 lakh, I can say, right? So net profit before tax, if it was 15 lakh rupees, again I'll calculate for you people here so that you understand. Net profit before interest and tax, if it was 15 lakh rupees, right? So I'll write down here net profit before tax is equals to, net profit before tax is equals to 15 lakh rupees. So what I need to do is I need to add interest in it, right? So what will be my interest amount? You can find out, students, only two categories are there for interest. One is 10% debentures, 4 lakh. So 10% on 4 lakh gives me 40,000. And the second is my 15% long-term loan. So 15% on 3 lakh, you can calculate, that is 45,000. So 40,000 plus 45,000 gives me the interest of 85,000, right? So if it is my net profit before tax, right? If it is my net profit before tax. So if I want net profit before interest and tax, net profit before interest and tax, right? So it gives me the amount of total 15 lakh 85,000, right? So 15 lakh 85,000 is my net profit before interest and tax. Then only I will deduct the interest amount, if at all, 85,000, and then I'll get the amount of net profit before tax. And then after that you deduct the tax amount of 9 lakh rupees. Then you will get the 6 lakh rupees as net profit after tax, right? Your calculation remains the same. Only addition is the interest amount. I hope it is clear to each and every student. Fine. So we are having the value of net profit before interest and tax also, that is 15 lakh 85,000 divided by capital employed, right? Now students, what do you mean by capital employed, right? Capital employed is the total of your all share capital and your liquid that is your long-term liabilities also. Fine. So what I'll do is, I'll do the total Equity capital I am having 25 lakh. Preference share capital I am having 12 lakh, right? So 37 lakh plus debentures I will add, plus long-term loans I will add. So what I am having is my 44 lakh rupees, that is my capital, plus retained earnings also I have been given in this sum, 5 lakh, minus fictitious assets. I am having fictitious assets of 1,50,000, right? So what amount I have got is, students, 47,50,000. So 47,50,000 is my capital employed into 100. Remember students, capital employed is your share capital plus retained earnings plus long-term liabilities minus fictitious assets, right? So that gives me my capital employed. Multiplying this and finding out the answer, you will be getting is your 33.3% or 33.37%, right? I am going up to 2 decimals so that it becomes again convenient. So 33.37% is my rate of return on capital employed. I hope it is clear. Moving on to the next part of the sum, that is point number 4, rate of return on equity share capital. Rate of return on equity share capital. Rate of return on equity share capital, right? What will be the formula, students? Rate of return on equity share capital means net profit after tax minus preference dividend, right? Why? Because it is only for equity shareholders. So net profit after tax minus preference dividend upon equity capital. I suppose it is easy for all, right? Okay, net profit after tax already given in the sum, that is 6 lakh rupees, minus preference dividend. How we can calculate? 12% on 12 lakh, right? So 12% on 12 lakh gives me 1,44,000 rupees, divided by equity share capital. Equity share capital is 25 lakh, students, into 100, right? So what I'll get is the answer of 18.24%. 18.24% is the answer for rate of return on equity share capital, right? I hope it is clear to each and every student. Fine. So what we have found out is rate of return on equity share capital. Formula is NPAT minus preference dividend upon equity into 100, right? Is it clear? Okay. Moving on to the next part, that is rate of return on shareholders fund, right? So what is my rate of return on shareholders fund, students? Rate of return, write the formula, rate of return on shareholders funds. Rate of return on shareholders funds, right, is equals to, what is my rate of return on shareholders fund, students? Rate of return on shareholders funds, again we have to take net profit after tax, because shareholders funds is always after tax, divided by shareholders fund. Shareholders fund. So what is my net profit after tax? 6 lakh, already given in the sum, also we had taken in the previous equation, divided by shareholders fund, right? Now here, dear students, what do you mean by shareholders fund? Shareholders funds means your equity capital 25 lakh plus preference capital, right, plus your retained earnings, whatever you are having, right? So what amount you will be having is 42 lakh, minus you need to deduct the fictitious assets, right? So 40 lakh 50,000 rupees is your shareholders fund. 40 lakh 50,000 rupees is your shareholders fund that you need to decide, right? So what is it? Total capital minus fictitious assets. So you will be getting the answer, right? So after calculating and deducting, what answer you are getting is 14.81%, right? 14.81% is the answer, I suppose. Yes, it is correct. 14.81%. I hope it is done, each and every student, right? You must have noted down with the formula also. Okay, moving on to the next part of the sum. that is your debtors ratio is asked. Fine, debtors ratio, again we had in the beginning found out the debtors plus bills receivable amount also. So I'll be writing debtors ratio. Debtors ratio is equals to formula you all remember, debtor plus bills receivable divided by credit sales, right? Don't mistaken it with your total sales. Credit sales into number of days in a year. Here it is clearly given 360 days. So take 360 days, right? Debtors ratio, debtors plus bills receivable, students, right? In the very first beginning, we had found out debtors plus bills receivable amount, that is of 7 lakh. So what I'll do is, I'll put up the same amount 7 lakh. Credit sales also we had found out, right? What is the amount of your credit sales? The amount of your credit sales was 36 lakh rupees. Fine. So 7 lakh divided by 36 lakh into 360. Credit sales divided by amount of your credit sales, that is debtors plus bills receivable divided by credit sales into 360, will give me the answer of 70 days. I hope it is clear. Each and every student, 70 days is my answer. Fine. Now the next thing is asked in the sum is your interest coverage ratio. Interest coverage ratio is equals to, you can calculate, students. So what is interest coverage ratio? Interest coverage ratio is your net profit before interest and tax divided by your amount of interest, right? So what is it? Net profit before interest and tax. We calculated 15,85,000 rupees. 15,85,000 rupees divided by your amount of interest, right? I told you there are only two type of interest we calculated. One is interest on debentures, second is interest on your long-term loans, right? So you can find out the answer after dividing 15,85,000 divided by 85,000, right? So you will be getting the answer of 18.64% when you calculate it. 18.64%. I hope it is clear to each and every student. Fine. So what we have done is, such kind of long sums will come in your exam, students. If you are very much clear with the concept, if you are clear with the formulas, then it will be very much easy for you all. 14 marks is very much scoring. Fine. I hope it is done to each and every student. Fine. Moving on to the question number 16, right? The short sum which I have given, again it is your VNSGU 2013 sum. Question number 16, that is your VNSGU 2013, right? What is simply asked, we will see in the sum. The very first thing they have given is a company has issued debentures of 20,000. Its preference share capital is 30,000 and equity share capital is 2 lakh. Then calculate the capital gearing ratio, right? What is capital gearing ratio, students? We will write down the formula first. Capital gearing ratio is equals to fixed interest bearing securities, right? So fixed interest bearing securities includes two things. You have debentures plus preference capital. You have debentures plus preference capital divided by equity shares, right? Divided by equity shares into 100. What is the amount of debenture, students? It is 20,000. What is the amount of preference shares? 30,000. What is the amount of equity capital? 2 lakh into 100, right? So the answer which you are getting, that is 50,000 divided by 2 lakh into 100. So that is my 25%. I hope it is clear to each and every student, right? So what is capital gearing ratio? Capital gearing ratio shows that how much is your fixed interest bearing securities compared to your equity capital. So we can say that 50,000 is 25% of 2 lakh rupees. Fine. So is it clear? So this was asked for 2 mark students. You can easily get it if you know the formula what is capital gearing ratio. Hope it is done fine. So we have completed both the sums of VNSGU 18 and VNSGU 2013. I have also provided you one of the sum, question number 17, that is related again to your VNSGU 2018 students. You can practice this sum at home, right? A balance sheet is given and your formulas are given similar to the sum which we did in our this lecture. You can practice it. We will solve it in the next lecture and then you can check your answers, and again I'll be providing you a set of practice sums so that along with the answers you can practice it at your home also. Fine. I suppose today's part was clear to each and every student. Fine. Do practice this sum one more time at your home at your convenient time so that you are very much clear with the chapter. Fine. Ratio analysis, again a easy chapter. A set of sums similar will be asked in university so that you can practice it more and you can score more marks. Fine. Do revise the formulas one more time. You are having the time with you to solve the sums. We'll be meeting soon in the next lecture. Fine. So this is Professor Shaurya Shah teaching you Advanced Accounting and Auditing Paper 6. Take good care of yourself, students. Thank you for your attention. See you in the next lecture.